Welcome back. Let's get a picture of this market now and get a sense of what it actually looks like right here from the Johannesburg Stock Exchange. It has been a pretty stable and positive time really of late when one takes a look at this market picture. But unfortunately today is not to be the case. Back below 51,000 points for the JSE All Share. Big 1.3% fall almost for the All Share this afternoon. 1.5% down as well for the financial stocks. Those were big gainers yesterday, but unfortunately today unable to keep up with that trend of going higher. It seems that the issues around China putting in legislative law in Hong Kong has certainly impacted markets as well, and you find that the United States' response to that is certainly going to be one to look out for and see how things fare on that front. So a general sense of negativity is just the gold index that seems to be headed higher there, 1.1% up. The industrials go down more than 2%. Of course, the effect on those Asian markets means that the likes of Tencent get a big hit as well, which then unfortunately means that Naspers gets a hit locally, and that impacts that industrial counter there as well. As I said, the indexes across Asia as well, fairly negative for the most part. Only the Shanghai Composite managed to eke out a small gain. The Hang Seng out in Hong Kong is 0.75% lower, and the biggest loser out in that Asian market region as well. Yesterday we saw negativity as well out of the Dow Jones Industrial, but the S&P 500 remains above 3,000 points, so a good trading mark on that front, while it's negativity as well out in Europe. So that continues to play in and rear its ugly head, unfortunately. Brent crude continues to be pretty much flat though, below that $35 a barrel mark, should I say. And really interesting here, of course, the issues around demand as the world begins to kick on again and perhaps open up a little bit more. One would have hoped that this number would head a little bit higher. Unfortunately not to be. $34.36 a barrel now for Brent crude. It's $17.26 then for gold currently. It is sitting slightly higher, while platinum is sitting at $834 a fine ounce there. And very quickly then on to South Africa's currency, pretty much flat for today, but certainly not where we've seen it in recent times at around 17.30 odd against the US dollar. It's 17 Rand and 50 cents for a greenback. A euro will set you back 19 Rand and 48 cents as well, then 21.58 for a British pound. Let's chat then to Warwick Lucas from Galileo Capital as he joins us to unpack this market picture just a little bit more. Warwick, it has been a difficult time to kind of understand where the market is looking. It seems like now Hong Kong is certainly becoming the focus.
Yeah, I mean, in a sense, it is a kind of a back to business as usual, Arabile. I mean, much like we saw the rest of the economy attempting to open up, we also see this reopening of old political wounds a little bit soon for my liking, but I suppose if it is a sign of some kind of normalization, I suppose I'll try not to take it in too bad a spirit.
Yeah, it becomes very tough then for even the world leaders though. Should investments be perhaps looking at themselves and saying, yeah, let's stay positive here, let's stay in the market? Because it seems like that's kind of what has happened over the last couple of days as well, maybe even the last month even. So the oil price even head higher. It was below $30 a barrel. Do you get a sense then that investors are perhaps coming back into the market and feeling that things will get better?
Well, let me put it this way. I mean, we've had China back at work for 6 weeks. Europe is a week or two, and about half of the US states coming back. So that's all pretty positive. I think one of the key questions now as the rest of the emerging world is further back along the infection curve. And I think similar to South Africa, many of them are in the situation where they have to go back sooner than they possibly would like to, forced by economic circumstances. So that remains a bit of a wild card for the time being.
And the local currency then, getting that strength, yes, pretty much not so much so now at around 17.50 odd against the US dollar, but there is a general sense of strength considering we were at 18 Rand not so long ago. Where does that come from?
Yeah, absolutely. I think part of that is perhaps some traction coming back in with the likes of commodity pipelines getting emptied. I think also part of it being the relatively high real rates that are being maintained on the rand, and I should say anticipated high real rates. I mean, we have of course not really seen any inflation data, and in fact inflation data is going to be quite messy, but I think we'll find that our repo rate is still effectively in real rate territory for the time being.
Yeah, so that becomes one to kind of look out for as well. From an economic perspective, though, do you think that South Africa is sort of sitting in an area where they will need a lot to get things right? And I mean, I know, of course, the market is not really the sentiment of the economy itself, but really important, though, for the economy to begin to shape up.
Absolutely. I mean, I think the big concern is the likes of the services economy, level one type businesses that still remain shut, and they are very big employers with frankly quite marginal employees. I mean, a good example of that being the tourism and hospitality industry. I mean, that's more than 500,000 workers that we're talking about there, and that's quite a substantial concern that those remain shut and unable to operate. But of course, the fact that the skies aren't reopened, even internationally, of course, would constrain them anyway. But at the moment, even the marginal players don't really have much of a shot at trying to scratch a living once again. So there's certainly concern that there's permanent damage to come from that score.
Let's take a look at some equity news then as well. Some company news in terms of half-year results coming out as well today. What did you make of those?
Okay, so we've had Nampak out. They made a decent fist of things, all considered. They're coming off a low base, but they managed to repatriate quite a lot of cash out of their Nigerian and Angolan operations, more than was originally guided to the market in their trading update. So they seem to be making a decent fist of de-gearing their operations. They certainly had a high borrowings problem that has substantially come down, and very fortunate for them as well that the sale of their glass business was concluded a few months ago. That certainly the glass business having a big problem at the moment with the lack of production from the alcohol industry locally. So all in all, a bit of luck, a bit of good management, and they're looking quite a lot better than they were 6 months ago, surprisingly.
Warwick, where are you looking right now for value?
Okay, so I think most of the economy is heavily sold down, and by that I mean even a regular company, as long as it's got a decent balance sheet, there's still a fair chance that it's been hammered into the ground, and those companies with decent balance sheets that have got a good shot at surviving are actually available at relatively good prices. Sold down though with relatively high debt situations that are really quite unlikely to make it. So one has to do one's sifting with great care.
Yeah, well, very, very critical and important one there. Thank you so much for that, Warwick Lucas, though. Galileo Capital joining us this Friday as we get into that market picture. Look, that brings an end from me here at the Johannesburg Stock Exchange as we gave you that market news then, as well as some other news as well. My colleague Nompumelelo Sizeba joining you right after the short break as well to continue with On Point. From me, Arabile Kumete here at the Johannesburg Stock Exchange, that's where the buck stops.